We will focus on overview of KYC. What are some of the reasons why which companies are doing and should do KYC? What are some of the trends and what are some of the future products that we expect to see in the coming months and years? And largely, we will cover few industries in terms of what are the challenges and opportunities in terms of KYC that exist. If we think about KYC as a whole, digital KYC has gained a lot of prominence in the last 2 to 3 years, especially after COVID. I think COVID was kind of a push for this industry, which pushed people to adopt digital KYC. And once it was adopted, industries were able to see a lot of advantages of adopting digital KYC, and the adoption has been on a very, very steep rising path since then. And a very good indicator of this is the number of new regulations that are launched by governments across the world regarding KYC, AML, counterterrorism funding, etc. in the recent past few quarters. However, when we think about KYC, a lot of us think about KYC to be something which is new. I would want to just take a minute to point out that KYC is something that has existed for decades, most probably for centuries now. Humans have always been interested in knowing partners, vendors, users with which human interact. What has changed recently is that with globalization and with us doing transactions online, a lot more avenues have opened up by which KYC needs to be done. And therefore, KYC also need to move to a digital first or a tech first center. If we try to think about the market size of KYC, so as per an estimate by the end of this decade, 2030, eKYC will be a $3,000 billion market. India alone will account for approximately 2% of this market. And the four industries which will account for the bulk of the eKYCs will be financial services, gaming, logistics, and e-commerce. KYC has been growing very, very rapidly with a growth rate of approximately 20 to 25% year on year. And we expect the growth rate to continue in the current decade. That being said, I would want to request Siddhartha to also discuss what are some of the reasons by which companies typically engage in KYC.
Hi, thanks, Akshat. So the key reasons I want to touch base for KYC verification, which has been very significant in digital age, as Akshat rightly said, it has peaked after this COVID. We had pandemic. Every businesses wanted to go digital because the things which were KYC existed before that as well, but it fast tracked the whole process of digitization. And why people do KYC is because of preventing identity theft, fraud, compliances with regulations which are based on some industries, particularly I would say finance and banking. Now that regulations have been coming to real money gaming as well. There is a risk management as a use case. KYC verification helps businesses mitigate risks associated with particular customer, their partners. For example, credit risk in banking industry, as well as I would say logistics industry. Trust and reputation. This is a biggest factor in e-commerce company. People, for let's say example of Amazon, they verify their vendors, their sellers, just to the Amazon brand name does not falter. The risk of that fraudulent basically items which are being selling on Amazon would have a risk on their reputation. There are big companies which faltered due to this. There was a huge e-commerce company of India which faltered due to that. And then there is always a operational risk, um, financial losses, reputation damages, and also regulatory penalties if you don't follow good KYC processes. There's always this KYC, digital KYC, which propagates digital transformation. Now, businesses are going, due to COVID, are undergoing digital transformation, and KYC process is the base to make this evolve. And digital KYC is also improving customer experience, making quicker onboarding, and being more efficient, and being that KYC process is more efficient. Akshat, you want to take the topic ahead? If yeah, what are
Sure,
the
sure.
topics? Yeah.
Thanks, Siddharth. Folks, while we discuss a bit more into what are some of the reasons by which companies will do KYC, we also want to understand from you that what are some of the use cases for which KYC is done by your respective companies. We will launch a poll and I'll request all of you to please answer what are some of the reasons why which KYC is done by your companies. We'll take a 1 minute halt for you to answer to the poll and then we'll slightly deep dive a bit more why KYC is being done. Thanks. Thanks a lot, everyone, for your answers. So, Siddharth, you touched upon a very interesting point that how there was a e-commerce company which was not able to scale as much as Flipkart and Amazon. I would want to slightly touch base more about it. So, and with the with our attendees also. So, one of the reasons by which, because of which, we are able to buy seamlessly from Amazon or from Flipkart or from some of the new age companies, let's say like Swiggy or Big Basket. For me, a very big reason is that I have trust in these companies. I trust that when I order something from a big company, that the product I receive will be genuine. I will not be I will not be frauded by the company or the suppliers of the company. And I think vendor onboarding, doing KYC of vendors, ensuring that the vendors are the correct vendors is a very big step to ensure that the quality control of the items being shipped to the end users are true, which in turn helps them to gain more and more trust and therefore more and more business with the users. And if we see last 10 years, I think this is how Amazon has scaled in India from 2013 when it launched to 2023 now. Uh, some of
Yeah.
the other reasons, please go ahead.
Yeah. So, Akshat, yes, there are a lot of reasons. The trust and reputation is very key. There is customer experience. You see, gaming industry, the customer experience is coming up with the KYC, and to have a good customer experience with the additional responsibility of maintaining regulatory compliance is also a challenge, right? And I think this is how we are turning the whole KYC landscape, how it's transforming over the years. And we are there are a lot of opportunities. We'll touch base on that in more in this webinar. You take this up. Why I want to ask, what are the toll gates of KYC? Why would a company want to do KYC? What would be that first check?
Correct, correct. Thanks to that. I'll also want to answer a question asked by Anadi as well as Prashanta. So, Prashanta, while there is no regulation per se when it comes to e-commerce, B2B or B2C, but there are guidelines around AML, which is anti-money laundering, as well as CFT, which is counter-terrorism financing, for both B2B and B2C. Typically, what we have seen is once the guidelines are launched, after that, it's a matter of some time before the guidelines convert to regulations. It's just a way of central governments giving time for the players to build up their systems so that their systems are in place once the regulations come. For Anadi, so Anadi, It can be merchant KYC, it can be user KYC or vendor KYC. Depending upon the industry, depending upon the problem the business is trying to solve, KYC can be done for multiple users or multiple stakeholders throughout the business. Example, if I want to give about this is if we think about any of the peer-to-peer lending platforms, the KYC is to be done for the person who's asking for a loan as well as the person who's financing the loan. I hope that answers your question. Uh, so while we discuss what are some of the reasons why which KYC is done, I would also want to discuss that what are the criteria due to which any company will start engaging with KYC. And Basis a lot of deep dive and in-depth analysis of the KYC industry, any company who is engaging in KYC will fulfill at least one of the three toll gates or criteria. The first one is that the company or the industry should be mandated to do a KYC by a central regulatory authority. Examples of this can be BFS sector, fintechs, NBFCs, etc. Criteria two, a company is doing few large ticket transactions and therefore the cost of doing even one transaction incorrectly is very high. Example of this will be a loan disbursement process. Uh, a lot of us would have read how loan disbursement may take as high as 4 to 8 weeks. While a lot of banks and NBFCs are bringing down this debt with the help of advanced KYC solutions, but the level of KYC that they are doing is increasing day by day and not decreasing because the cost of even one incorrect transaction is humongous. The third and the last criteria will be if an industry or a business is doing a large volume of micro or small ticket size transactions. E-commerce and gaming are the industries that comes to mind. India especially is a country which is very famous for micro transactions within gaming. While the cost of one incorrect transaction might not be high, but a cumulative cost of non KYC users doing a lot of micro transactions will add up to a significant amount. So for any industry to engage with KYC, at least one of these toll gates or checks must be true. And I think we should also introspect if any of these toll gates is true for us and have we started doing KYC or not.
Right.
More.
Right. So,
So
yeah.
go on to that.
Yeah. So being in a KYC industry, I've seen a lot of trends and technology coming up. As you said, Akshat, these one of these three criteria would suffice for any industry or any company to do the KYC. And how this transformed is uh, in the whole technology is there are new opportunities, new trends. I'll touch base on that trends for a few minutes. The biggest one or the fastest growing one is the API based solutions. There are API based solutions. You see basically companies integrating APIs from vendors, which gives verified data from data sources directly, which completes the KYC process very quickly and more efficiently. Very focused and niche for certain industries like, say, gaming. Right. Even in fintech companies, new age companies, neobanks, these KYC, API KYCs have been prominent. New technologies such as AI ML has also been developed. New models are being created. ML algorithms are being created to analyze customers' data more efficiently. Right. It also drives, basically detects data patterns, anomalies in data to indicate fraudulent activities, fraudulent transactions, high risk customers. And these AIs are being used to do a check on customer transaction for potential risk. You have everyone has heard of how Jamtara transactions happened, right? That is happening, and these solutions now are being in place in banks to monitor transaction and do suspect tracking. Like for example, I give you an example how it works is, uh, you transfer you transfer the money from one account, and a lot of money is coming to one account, and there is one transaction after all the transaction, which is a cash out from ATMs. This is something which banks are tracking. Once cash is out of the bank, there is no tracking. There is where the accounts get flagged. If lot of amount is coming from various sources, and there is one transaction which is happening continuously on that account, after those transactions the cash is taken out from ATM, that is a suspect. And this is how this ML algorithms are working to flag those accounts. So, and there are new biometrics evolution happening now. We are seeing bank apps to have a facial recognition to enter your banking account, fingerprint scanning. Makes more multi-factor authentication, right? These are various other verification methods to validate a customer. Earlier it was very traditional, someone has to use a ID password, which was very cumbersome. And you would understand, if in certain banks there used to be 5 6 password to do one transactions. So it's a cumbersome process. These technologies are making the whole KYC process very easy, very seamless, and easier to use, right? Um,
Uh,
Also,
I
yeah,
will. I would want to take one to answer two
sure,
questions, one from Anil and one from Ashish here.
sure, yeah.
We'll start with Anil. Can you provide the checklist for KYC new account creation? So, Anil, a checklist for any new account creation, what KYC should be done, will slightly vary from industry to industry and even within industry from company to company. However, Cashfree has launched a new product which is One Click SDK, in which, as per the industry, we can give a ready reckoner of APIs that should be used for any KYC for new account creation. Furthermore, the effort to integrate this SDK will be very less, as it is only one API integration and it will be ready to use from day one. Any new APIs or any new KYCs that Cashfree launches, or if the client wants to use, can be enabled with a toggle button itself. So even in future, the maintenance and the performance enhancement effort will be almost negligible. Uh, and I will also cover this point again in what I like. Continuing with what are the trends of KYC. The second question is from Ashish. Since KYC is common across industries, why do we need to do the same KYC with every bank or other companies?
Very interesting question. Yeah.
So, do you
So
want
I'll
to take
take
this
this
one?
answer. Yeah, I'll answer
Please.
this. So Ashish, I agree. This is a pain actually, and see, if I am a customer, I have to do a KYC in, say, HDFC Bank. Then I have to do the same KYC in other bank. There are efforts being made. I understand industry wise there will be a difference, but almost in same industry the KYC norms will be the same. The method could be different, right? But the norms would be the same. So there has been a drive to do this KYC in a single shot. There was a drive for CKYC, which in central government had devised, where all the KYC data will be stored at one repository, and in doing KYC, you can get it from the CKYC Sarsai portal, right? Yet it has not been adopted yet. There, that was the part of making this centralized. But I'll take this point. There could be a scenario where everything gets decentralized, right? And you are the sole owner. It's your data. Say Ashish is the person. It's your data, and you want to go and get your account opened at X bank. You just go and authorize, yes, X bank can access my PII data. It gets the consent from you. It accesses the data. It does its due diligence and gets you onboarded. These technologies are coming up. It's under blockchain technology where you are doing the identity solution in a decentralized way. You are the sole owner of the identity, and it's your right wherever you want to go and get onboarded. It's your right. Now, I agree. It's a painstaking, but the world is moving towards more decentralized norms, centralized norms. Centralized is something which will be controlled by one authority, but decentralized will be controlled by the citizen itself, the merchant itself. Any end user will be control of their PII data.
Thanks for that. I just adding a few pointers here. So as of now, a lot of focus has been given in terms of CKYC, or even if we look at the account aggregator framework, on getting the positive results from a centralized authority with minimal friction once an information has been shared. However, one area or one opportunity that still exists and central governments are slowly picking up is a central fraud registry. While using CKYC or account aggregator, businesses will be able to know that, hey, if a user has shared, let's say, their details with bank one, then bank two will be able to take the details. But what if user has done fraud with bank one? Will the other financial institutions or gaming companies or e-commerce companies know about that fraud and be able to flag the user upfront? This is what a central repository can help. And emerging technologies, I'm not sure if I should call them emerging anymore, like blockchain or NFT are some of the leading proponents when it comes to answer giving an answer to these solutions.
Yeah.
Ashish, I hope I answered your question. Moving on to the last question from Prashant. Can you explain more about one-click SDK and its features? So, Prashant, I'll very briefly take a minute to give you some details, and post that I'll share my email ID in the chat. I'll request you to please reach out to my email ID so that we can share more details. So what we have observed is that typically, as Siddharth was saying, that industries are moving towards APIs when they want to implement KYC. And KYC is not a one document KYC. Typically, clients or industries ask for multiple information from the client, which leads to doing multiple integrations, which takes a lot of time, a lot of effort. One click SDK is a solution that will reduce the effort and time to initial effort and time to go live with multiple APIs to onboard a vendor, onboard a user or any other stakeholder, or just to verify their identity on an ongoing basis, as well as the effort that would have gone to regularly maintain and enhance the performance of these APIs in-house. That also will be done by one-click SDK. And I think a lot of startups and small companies, we have seen a lot of traction for one-click SDK for this. That being said, I'll want to skip this a bit and jump back into what are the trends that we are observing when it comes to KYC. Prashant, we'll share my email ID in the chat. Please, I'll request you to reach out to me there.
Sure. So,
So moving back to the trends that we have been observing in KYC, while Siddharth gave a lot of inputs on what are some of the technical trends, I want to touch base slightly on what are expectations of different stakeholders within the environment.
Yeah.
And I am able to break the stakeholders into two distinct buckets or cohorts. One is the merchant side of stakeholders. What do merchants expect from companies like AuthBridge and Cashfree when we think about KYC? And the second cohort will be end users. What do end users expect from the merchants and from companies like AuthBridge and Cashfree when it comes to verification? For merchants, the key will be what is the ease and effort of integration and what is the performance of the APIs. Both these questions can be one answered by one click onboarding that we discussed. Apart from that, we are also launching a no code verification tool very soon. So as of now, within KYC industry across the world as well as in India, if a merchant, if a company wants to do KYC of any of their stakeholders, there's a limitation that they have to do at least one integration. They have to set up a tech stack without which they cannot do a digital KYC. Very soon we will be coming up with a product by which companies will be able to do digital KYC with zero integration, zero tech effort. On the user side, if we think about it, the user wants ease of use.
Hmm.
And one of the very frequent KYCs that is done is for a user to verify their bank account details before they can receive money in the form of winnings from games or in the form of refunds from e-commerce companies or in the form of loan disbursements in their accounts. And are asked to share their account number to verify their account. Unfortunately, users do not remember their account number. Account number is not a piece of information that we remember. Cashfree has come up with two new products. One is reverse penny drop, in which user will make a 1 rupee transfer using their UPI app to a bank or a gaming company, by which a bank or the gaming company will be able to validate their bank account. And the second is for the banks and the gaming companies to be able to understand or extract their UPI ID from their phone number, and from this UPI ID then again be able to validate their bank account. So as we move ahead, while there will be a lot of technological advancements, the theme around that will be to make it easy for the user to reduce frictions and to make it less and less costly for the merchants. Siddharth, please, if you want to add
Yeah.
anything.
So yes, you touched upon a very great point. That who remembers account number in this digital age. As we progress into digital age, earlier you used to understand when we were small, we used to remember mobile numbers. We used to have it by heart. Now we don't need to because mobile is there. You save it, right? In a similar way, the things are getting paperless. So you understand, um, there there how this progressed into a reverse penny drop process is, earlier someone for a payout is to give a cancel check. So and someone used to type that account number from the cancel check and do the bank account verification. Bank account verification again is a standalone process as well. Then people started doing NLP OCR based approach on checks to do this automatically so that there is no manual entry. Now everything gone. UPI comes in. You just pay 1 rupee, which will be refunded back, and you don't have to remember anything. You just have to remember your UPI pin. That's how the seamless the whole journey has become in industry, right? So see, these trends are coming due to user habits, what is happening in the world. And this is not something someone is cooking up in the house and saying, "Aaj ye karte hain," or let's do this today, right? And people are finding other means like to do KYC, like alternate data approach. We at AuthBridge do alternate data approach a lot, right? We excel at employee verification, do alternate data approach. Here, the alternate data approach you can see in BFSI industry as well, and credit industry as well, where they use utility bills to verify business if they are paying, if there no default. to have more robust information about that individual. There is, if I continue on the trends, there is a risk-based approach where it's not like one size fits all. It's never like that, right? There will be a high-risk customer, there will be a low-risk customer. A low-risk customer, when analyzed, should have a very streamlined KYC process. A high-risk customer can go through a more robust KYC process. This is how the risk-based approach KYC is transforming into. Being all said and done, we are still there. The new technologies coming up like regulatory tech, because so many regulations are coming up. Who has the time to devise all that? The regulatory track is coming up. There is opportunities coming to channelize all these compliances. Data privacy technology, data protection technologies are coming up, because you are playing with, I will not say playing, it's a incorrect word, but you are still using customer data to do analytics on it. But you have to be very sensitive about that data. It's a personal data, and businesses who are using it needs to store it in a very advanced data privacy technology, encryption technology, data storage solutions, and whatnot, right? There are new technologies coming up, like differential privacy, right? Where it analyzes data of a person without revealing the person's identity, right? These trends are coming, and this is how the industry is evolving.
So Siddharth, very interesting, and I would want to discuss one more KYC trend that I've seen, which when I use it for the first time, look to me out of straight out of a science fiction movie. But before I go there, I would want to understand from our users what are some of the products within KYC that they have been using, what are some of the products that they want to use, and let's take 1 minute to get their answers for that poll. And we'll continue with at least one product that I've seen, which was a very, very innovative product when I first used it. Uh, to Prashant, again, I will discuss this with you offline. I hope that's all right.
I think this is a multiple choice, because one
Yes,
document will not suffice any industry, right? That's how to mitigate the risk.
correct, correct, correct. Agreed. Cool. Uh, Apologies for this. It should, as Siddharth pointed out, should have been a multi-select. Uh, So I was discussing a KYC feature that, at least to me, sounded straight from out of a science fiction movie. So not sure, but I assume at least some of you would have used the DigiYatra app or the DigiYatra service that has been launched by the Indian government recently. Right? So if we think about it more closely, it is a very, very advanced KYC solution that has been deployed by using nothing else but the facial features of each and every traveler. The airport authorities and the government is able to know whether to allow or not allow a particular user. If we extend it a bit far, all of us have been using our face or our fingerprints in our mobile phones for 4 to 5 years now to authenticate and validate ourselves and use it for multiple apps, for example, finance, e-commerce, etc. And I think with roughly 60, with millions and millions and billions of IoT devices already engaging with us in our lives and ever increasing, this might be the future of KYC, where it will become a documentless KYC as opposed to a document enabled KYC today. So we are moving in that realm where our fingerprints or our face will become our identity, not only in the physical world but also in the digital world. And instead of carrying any Aadhaar card or PAN card or PAN number, all of these will subsume and the identity will become just the face or the fingerprints. And using IoT devices, we will be able to capture that.
Agreed. I am just thinking about these IoT devices. People would know the IoT devices have been deployed in automobile industries as well. Everyone knows about MG Hector, right? It's called Internet Inside. So basically, what it is doing is creating persona of a driver inside the car, right? Tesla, for example, it absolutely knows who is the driver and how it adjusts the seats, the mirrors according to that. Just think about extend this far. There could be keyless cars, fingerprint on the dash, and it's your car. You enter, or say facial recognition on window screen. That yeah, it's your car. Otherwise, the car won't start. We are progressing towards that future, and KYC is the baseline of all that. Identification of a person. It's very important.
So, what seems a bit ironic to me, Siddharth, is that while in some areas of KYC we are able to do a lot of advancement, we have used facial recognition and fingerprints as a de facto KYC. But if you look at some of the industries, there's still a lot of growth room when it comes to KYC. As
Agreed.
per a recent survey done, if we talk about financial institutions, more than 60% of financial institutions are doing at least 60 to 70% of the KYC process manually still. And this number or this status across the globe, it is not the number does not change significantly from one geographic region to another.
Agreed.
One of, if we talk about financial institutions itself, some of the other challenges within KYC that are crippling is uh, financial fraud, stealing of credit cards. We touched upon Jamtara before. Account takeover, a hostile entity takes over the accounts, usually accounts which are dormant or semi-dormant, and start using those accounts for money laundering using microtransactions. Creation of ghost identities and ghost accounts. While a lot has been done and a lot is being done to avoid all of these, AML is one of the banking, and within banking, AML is one of the most highly regulated sectors. But I think continuous KYC instead of periodic KYC, what we have today,
Yeah.
and real-time transaction monitoring. I see a merger of identity KYC with transaction monitoring, which will give rise to a real-time, continuous, perpetual KYC that will help us elevate a lot of potential problems that we are seeing in the banking sector today. What do you think?
Agreed, Akshat. That is what we are progressing to. I think there has to be a perpetual KYC. Otherwise, you can't mitigate risk in the future. It's not necessary a person would be fraud today and cannot be fraud tomorrow, right? So the perpetual KYC needs to be done, and there are frequencies allotted in BFSI sector in banking that KYC has to be done every 10 years. For high risk customers every 2 years, right? There are norms, but we have to do it in a more uh, process based model, rather than a very ad hoc approach, right? So this is how the regulations will also change. I think the regulations will change in the future because we are getting digitized and a lot of things are happening, and people want to have control over their PII data as well, and businesses don't want to suffer financial losses. Both have to be there are both ways to go around it.
Perfect. And in fact, there is one industry that has already start utilizing perpetual KYC if we think about it, and that will be gaming industry. So as
Right.
per regulations within gaming, there are certain states wherein gaming is allowed within India, and there are some states wherein gaming is not allowed within India. A similar structure exists in other countries like America, some countries in Europe, where gaming is allowed in some geographic regions and it is not allowed in other geographic regions. And geolocation, which is another form of KYC, has
Yeah.
been very, very innovatively used in these industries to allow or not allow a user from engaging in gaming, as well as engaging in games that will involve betting also.
Yeah, geolocation is something which needs to be exploited more. I think there are still in industries who use physical verification where a person goes to that location, sees how the location looks. In a geolocation, I think uh, address verification can be done instantaneously because every phone has geolocation on. It's just a matter of exploiting that technology. I think there will be huge significant cost reduction in some industries, especially the ones where physical verification is required currently. I think there are still risks, but we sh- I think geolocation could be one of the key things to do KYC on. Map My
Correct.
India, everyone knows Map My India. They are doing a lot of things with government of India on that.
Correct, correct. While we continue to understand the challenges of few more industries, the previous poll that we ran, some of our attendees were not able to select multiple options. We would want to give the poll again, wherein people can select multiple options. Let's take 30 seconds to understand that what are different documents that are being used with the help of a poll.
I see a question from Karthik. What are the KYC options in shop verification modules? Karthik, I think we can discuss this uh, on my email. I'll send you my email. I think we have a solution for it. There could be multiple options. There could be shop establishment ID verification and GSTIN verification, as I touched base on basically geotagging as well, because a shop needs to be validated where it's located, what's its registration number, and GSTN details. Is it GST compliance? Lot of things come into picture. I think I touched base upon few of the articles in shop verification, which is not very standardized, but there could be a solution which we have, which will suffice. If you want to reach out to me, please do. I'll drop my email on the chat.
So, jumping back to gaming. Uh, while geolocation has been very, very beautifully used by the gaming industry to comply with the regulations, gaming is still one of the industries which is very, very seriously affected by KYC or lack of it. So, as per several reports, roughly 47 to 48% of all gamers engage in microtransactions or money movement while online gaming, and 20% of all the gamers who are doing any sort of money movement have been affected by identity theft at least once. And the reason why gaming becomes a very, very lucrative option for hackers and money launderers is that all the transactions are micro in nature, which makes it all the more difficult and costly for regulators to track the money trail. And that is why, if you look at it, the new guidelines have been launched by the Ministry of Online Gaming in India, that there will be multiple approval bodies, and any gaming company will have to take approval from at least one of these governing bodies before they will be able to allowed to operate within India. Uh,
Yeah.
Similar identity theft we have also observed if we talk about it in e-commerce. So while the numbers are not as bad as they are in gaming, but even in e-commerce, roughly 25% of consumers are afraid that their credit card or their personal information might be stolen, and therefore either they will not want to download an app on their mobile, they will still want to stick to a web base where they can sign in, just purchase and sign out. It is leading to cart abandonment. So all of us will be very, very skeptical of buying from a new e-commerce website. While users maybe will be able to browse the products, select the products that they need, maybe add to the cart, but once it starts asking for personal information,
Right.
financial or non-financial, it is seen that a lot of users will just go for cart abandonment. The problem is so steep that roughly 10% of all online shoppers in America have faced identity theft in their life at least once, which is a very, very significant number if you think about it. What do you think, Siddharth?
Agreed, Akshat. I think identity theft is the first thing which has to be prevented, and the robust KYC process would be first step to do that. I'll touch base on the data privacy part as well as data protection part technologies as well. That's where now businesses are trying to focus because the regulations are coming for data privacy, data protection as well. And I think one step which government has taken is to remove the card information from the respective businesses and put it on the network level, in encrypted level, which is the vault, which happened last year, right? And now the card details, the encryption part is not stored with the e-commerce; it's stored with the network. Now even PGs have to call the network and take that token back, right? It's not with the businesses anymore now. So this is how it is happening, and data privacy, data frauds, and Indian government, central government are doing steps to ensure that data privacy and data protection.
Correct, correct. Siddharth, while we continue to talk about some of the challenges across industries, I would also want to understand from the audience what are some of the challenges that they have been facing when it comes to KYC. We will launch the third and the last poll for the day, wherein we'll request all the participants to share with us what are the challenges that they have been facing. Siddharth, after this poll, while I would love to continue to extend this, but I think we are running out of time, and
Yeah.
I would want to open the floor for a lot more Q&A if the audience wants for the last 10 to 15 minutes. Uh, we'll start with Q&A. While so there's one question from Bhani. How can we streamline KYC for SMEs or shops? Siddharth, do you want to take this one?
Yeah, hi, Bhani, the Karthik also had the similar question, right? Streamlining the KYC for SMEs and shops is currently a very typical task, right? Lot of SMEs have different ways to do the businesses. They have different documents. I think still there is a possibility to do KYC. I would say this is a more neglected area for KYC because uh, currently these SMEs don't have standardization of documents, right? Which is the first step to do the streamlining of KYC. There are steps being taken to streamline the documentation. That's why once that is done, then banks will also start jumping into that business. Currently, banks are ignoring SMEs due to the ad hoc of getting those data streamlined. There, it's a very manual process, huge cost involved, but Yes, there's a way. Uh, we do it at AuthBridge. We do a certain KYC or a vendor KYC for SMEs, shop verification. Currently, there's no streamlined KYC process for it.
Thanks a lot for that, Siddharth. We'll move on to the next question from Kuldeep. Reverse penny drop is only for UPI or for other modes like NEFT and IMPS? So, Kuldeep, reverse penny drop is a way in which a user is able to transfer INR1 without sharing their account number and without knowing the account details of the merchant, which is as of now possible only via UPI. Once the transfer is made via UPI, the merchant is able to know the account details by which the transaction was made, and they will be able to whitelist the user. There is one more from Bhani. How can we verify bank accounts of banks that are not supported by IMPS penny prod? So there are multiple options, Bhani. Uh, Reverse penny drop or VPA from phone number or UPI verification are the three most used options. There might be some banks that don't support UPI also. In that case, yes, in that case, we can move to a more to a third option, which is a NEFT-based bank account verification. While NEFT-based bank account verification is something that is not used by majority of the merchants, but in some silos, we have seen NEFT-based bank account verification to be very useful. And Grameen banks, cooperative banks that are not a IMPS sales are perfect examples for such transactions. Any other questions? Thanks a lot, everyone, for joining. Siddharth, it was a pleasure connecting with you and discussing with you different
Thanks,
aspects
Akshat.
of KYC.
Thanks, Akshat and Cashfree team for inviting me. It was a great session. I also learned a lot from you, and also see we are all working for the same cause, right? So that it's great to educate and learn something about KYC or verification always.
Sure. Thanks a lot, everyone. Have a nice
Thank
day.